Okay, final point. Thanks for letting us just have fun here. And these long form interviews do open a lot of doors that are, and topics that are typically not covered. Okay, healthcare. Number one cost in so many in retirement aged lives. Number one reason for bankruptcy. We've got to take it seriously. You can always write off your health insurance, and that's going to be written off through your S corporation. And that's critical that you do it properly. Your S corp should pay the premium. You may go, well, it's a personal policy. Don't matter. Let the S corp pay it. It's also going to be stated on your W-2. It's going to save you additional FICA. So you want to make sure that you're on top of your health insurance deduction. Now, for those out there that are healthy, we want to start stockpiling money away for the future. And we want a tax write-off to do it. And this becomes what's called the health savings account, which I think it is number one or two, the best tax strategies in America. It is better than the Roth IRA. You get a tax deduction on the way in, tax-free growth, and it can come out tax-free at any age, immediately even, for a qualified medical expense, which is a very broad definition. So the point is, if you're healthy, generally, we want to get a high deductible plan and sock money into that HSA, and that tax deduction is up to $8,500 if you're married, filing joint, around $42 whatever if you're single. But a married filing joint or head of household or single, this write-off is on the front page of your tax return. You cannot phase out. No matter what your income level is, you can take the write-off. It's super powerful. You can invest it in real estate. My HSA owns rental property and cows, and I'm getting a 20 to 30% return inside my health savings account. Then you can pull it out for medical at any age, at any time. That's the health savings account. They're super powerful. You can read up on them more. But if you do not choose a health savings account qualifying policy by the end of January, game over. You cannot take this write-off next year. It's going to be very, very difficult. So right now we are in healthcare enrollment period, and you do not want to wait till the last minute to do this. So it is a year-end strategy in our world because you've got to get on the right network, depending on your state, get with a broker, and start shopping for the right type of health insurance. That is called the HSA, the first leg of 3 strategies. Any thoughts, comments, questions?
So this is interesting, and I do have a question on this one. I would assume that this is not possible with health sharing plans. Is that correct?
That's right. So the Christian healthcare sharing ministry plans, wonderful. That's like a little co-op. You don't have to. It doesn't even have to be Christian, but a family, 10 families get together and say, let's collaborate on medical expenses, and you're kind of self-insuring in this group. If you go that route, which can be cheaper than health insurance.
Which I tell you, we did, and it has been fantastic for us. We've been very happy with it.
It's more of a cost-saving procedure than a tax strategy. But people have to be okay with the group, the network, the procedures, and catastrophic medical can be kind of a risk because these smaller groups may not be able to cover that. So
we're in a big one. We're in impact, so it's huge. So
that's cool.
Yeah.
So if you want to do the healthcare sharing ministry strategy, love it. You would not follow in any of these other tax preferred ones. So health savings account is first. Number 2 is the most common, is the flexible spending account. For any of you that have a day job or your spouse has a day job and they give you $1,000 or $2,000 or $3,000, it's $3,500 this year. That's a reimbursable expense that's tax-free to you. But if you don't use it, you lose it. So the use it or lose it plan is what's called a FSA. It's flexible. You got to just turn in your receipt, but if you don't turn in your receipt before year end, you miss out. Now there is a catch-up provision if your employer offers that, but you may not know. So you got to reach out to your employer and find out what the rules are and make sure you don't lose it. That's strategy number 2. And you can have both. You can have a health savings account and a flexible spending account. The third strategy is called the health reimbursement arrangement. Now this is for small business owners only. And what you would create in your small business is a reimbursement plan. Now whether you're married or single, it's going to look different, but it's unlimited. And it's tax-free income to the employee, which would be you or through your spouse. And it's a complete tax deduction at your entity level. So if you have higher than average medical expenses. Now, again, this is over and above health insurance premiums. They're going to be a write-off. But if you have kidney dialysis, cancer, a knee surgery, LASIK, you have, who knows, 100 things that could be going wrong. High prescription drug costs. Whatever it is, if you have typically more than $5,000 a year in out-of-pocket medical copays, deductibles, we're going to drop you into an HRA plan and reimburse all those expenses and write them off in your business. Well, that has to be done before year end. And even if we adopt this plan, dated 1/1/25, we need to get that done in the next 3 weeks and get that reimbursement done. So if you have higher than average medical expenses, we want to use an HRA plan. It has nothing to do with insurance. There's no health insurance. It is self-administered. We do the whole plan for you for $500. We give you the plan. Here's how you run it. Knock yourself out.
So,
it can be in conjunction with the flexible spending account and the HSA.
Mm-hmm.
So if you're healthy, you do the HSA. If you're unhealthy, you do the HRA. If you're you got some money and you're wherewithal, you do the HRA and get the reimbursement and then fund the HSA for the future. You can double down. So these are wonderful strategies for everyone out there that are kind of like out of sight, out of mind when it comes to medical, but when it comes hard. So right now there's several deadlines you got to worry about. These are, again, I have a whole chapter on just healthcare in my book. You can get it on Kindle, Audible, print, articles. I've got podcasts on this. Study it, people.
Okay, for the small business owner has 20 employees. Do they have to, if they provide it for themselves and their spouse, do they have to provide it for the employees?
Yeah, so then we go what's called the QSE, Qualified Small Business HRA, and it's a different set of rules. They're still pretty powerful. We have that for our law firm and our employees, even here. In every one of our organizations, we use the HRA, QSE HRA. They're just cheaper. They're more affordable. And then we help the employees go choose their own plan, and we reimburse that. So you're going to, so bigger employers, you're going to have a kind of a modified plan. So when you talk to the tax lawyer at the office, you guys can go over that.
And that's when you get over 55 employees, I assume?
No, frankly, that's going to even be a different rule over 50.
Okay.
But if you have more than one employee,
Yeah.
you can't just do an HRA for yourself and screw your employee over. So you would have to, there's different levels of plans you would have to start implementing based on the number of employees you have.
Okay, that's really important. All right, Eric's got a great question. He says, would you recommend I get an HSA and FSA plan if I get amazing health insurance through my wife's work?
Okay, great question. I just shot a video on this the other day. First of all, a flexible spending account you would never do for yourself. Those are big corporate plans, cafeteria plans. If they offer you one at work, use it, don't lose it. Just take it. Now, but as small business owners, 99% of our small business owners are never going to implement an FSA. It's a pain in the ass. You don't want to do it. You're either going to go HSA or HRA. So flexible spending accounts, if they're given to you, take advantage of it and run. Now, second point, he says my spouse, his wife, has a day job with great coverage. Perfect. I would ask you this, and I'll answer both answers. Are you healthy? If he says, yeah, we're pretty healthy, then your wife's going to run into work tomorrow and say, holy crap, when is enrollment? I want a health savings account qualifying plan. Then you guys could go set up an HSA plan anywhere you want. The HSA is like an IRA. You can set it up anywhere you want. All you have to do is have a qualifying health insurance plan. So she checks the box at work, done. You can go set up an HSA at directedira.com. And we'll set it, you can buy crypto with your HSA. You can buy cows and rental property, whatever. So have your wife go into work and select that. If you say, Mark, no, we're kind of unhealthy. Okay, let's take advantage of the best insurance you can get. Let's stick it to the employer. Sorry, I'm an employer too. Stick it to the employer, stick it to the insurance company. You get freaking a copay, juice it up, $5, whatever, copay thing, free meds, whatever. Get the best plan you can because you're going to need it. Then you go into your small business and adopt an HRA. You may even set up your own health insurance separate from hers. Who's the unhealthy one? If she's unhealthy, put her in the company plan, set up your own independent plan that's cheaper and do an HSA. You got lots of options. So hopefully that made sense.
Yeah, no, that makes sense. I love that. That's actually super helpful. And keep the questions coming, guys. Actually, we're just wrapping up, but do put your questions in the chat in the Facebook post there. And if you have questions that we don't get to today, then I'll do the best I can to get answers from Mark and his team, and I'll get them out to you. Anyway, that said, Mark, this has been huge, and there's a couple of things you've touched on that are, I know you're not going to say it, so I'm just going to throw it out there. Oh man, actually, oh Eric, I wanted to ask him about that. I can't believe I forgot. I'm glad you brought that up. I'll get to that in a second. But we're talking about Trump's new accounts for newborns and the Dells contributing $250 per kid and all this. Very interesting topic. I'm gonna ask him about that in just a second. Before we talk about that, Mark, you've touched a couple of times on using self-directed IRA, self-directed 401ks, all that. You own a company called it's directedira.com, I believe. Is that correct?
Yes. So directedira.com is our trust company that lets you set up a solo 401k, the Roth, the HSA, the covered L, the HSA, all of those tax preferred plans.
Mm-hmm.
If you use directedira.com, you are able to invest in what you know best, which is probably going to be real estate, notes, crypto. Now, all three of those are wide open to you rather than just the typical Wall Street smorgasbord. So directedira.com, we are a huge referral partner with Michael, and you can get a discount or benefit setting up your account through our relationship. I think our team.
I don't know if we have a link for that or not. If we do, if we do not have a link for directed IRA yet, is what Camille is telling me. But here's the thing, guys. If you reach out to directed IRA and let them know you're with Club Wealth, and ask them to extend you the discount that we get there, they should be able to do that. And if not, then just reach out to me and I'll get you connected through the back channels, and we'll make sure we make that happen for you. But here's the thing. Don't try and do it on your own. You need these guys. It's complicated, and I don't even understand it all. Don't want to understand it all. They know what they're doing. Just let them do their thing, and just. But I'll tell you that and in fact, I've got a big project I'm working on right now, and it's big bucks. But I'm curious, Mark, can you take a very small amount of money? Let's say let's say I'm getting into a deal and I'm using my sweat equity to get into the deal. I'm getting into the deal with stuff other than cash, but I want to be able to stuff it into an IRA so that I can take advantage of that tax-free growth and tax-free cash flow. Can I just do, if I just take, a couple $1,000s and just throw it into this project so that I can, from my IRA, can I do it that way? Or is there some kind of rule that says I have to contribute a certain amount up front?
Well, once your money is into your retirement account, whether it's a Roth, a traditional HSA, any of those, that's step one. So
Okay.
what account are we going to fund? How much can we fund? What is the strategy to get it there? Do we want a write-off? Do we want a Roth benefit? Step one. Step two is if you do choose a self-directed platform like Directed IRA, and the fees are, you're not paying a percentage fee or whatever to like stockbrokers or whatever. This is your money. We're just creating the platform. Our fees are very, very, they're so much cheaper than a typical brokerage house.
And it's a fee, not an ongoing commission.
Exactly. We don't get commissions. It's your investments. You do whatever the hell you want.
Right.
So step two is, what do I want to invest it to? So you could invest into a small business. I know you and I were talking about a project earlier.
That's the one I'm talking
come
about.
with that dollar amount from a 401k. They could come from that with an IRA. They could come to it with a Roth IRA or a Roth 401k. Never pay tax at all on that income. So whether it's a small business, a syndication, a gold, silver, palladium, crypto, real estate, notes, any of that you can do with that retirement account. You just have to make sure that the one creating the LLC creates the provision to allow a retirement account, which is super easy to do, if that makes sense.
So first of all, that piece of advice probably just saved me another, oh my gosh, yeah, that's probably another $1.5 million a year easily. So thank you for that, and I'm going to share that with some of those partners in that particular business. So that's exciting stuff. All right, so back to Eric's question about these new accounts. What are your thoughts? Is it going to really happen? And if it happens, how do we make sure people can take advantage of it?
Well, I'm looking right now too. That's what I was looking up is the if there's income limits for families to contribute to them. And
I was assuming there would be.
I was too. And right now
Yeah.
I'm seeing no. Um,
Really?
yeah, there's Coverdell ESA limits, which we have a workaround for that, but there's no income limit. My concern with it is, and these are great, and Dell was trying to help for the kids from low income families and putting a big chunk of money in there. My concern with these is you cannot self-direct these accounts. These
Mhm.
accounts are going to be managed um, and by a brokerage house more than likely. And I'm trying to look at all the different, um, which is they're generally going to be quiet on that because Wall Street's going to be so excited about these because these accounts are going to be worth a lot of money and they're going to be managing them. So my concern is the self-directing aspect, but I'm just looking at annual limit, 5 grand, qualified expenses, education, first home, starting a business. Taxed as ordinary income when they come out, but they grow tax-free. Tax-free for qualified education, if you pull it out for that. Anyway, I'm still getting up to speed on these, and they're
Okay.
getting so. To be honest.
Well, and I mean, they're not out yet, right? They're not available yet. Is that
Yeah,
right?
right, right.
Yeah. So, and is this 2026? Is that when they're supposed to come out?
Um, they can open them in early 2026.
Okay.
Managed by
Interesting.
private banks and brokerages, Fidelity and Schwab, funded by parents' relatives. Investments must be low cost, diversified US stock index funds. Um, it's locked down until they're age 18. And again, if they pull for college, it's tax free. If for any other reason they pay tax when they pull it out.
Love it. Love it.
So,
Dude, that's huge. Okay, Mark,
woo!
I
All
can't
right.
thank you enough. I mean, we've covered a lot of ground here today. We're going to chop this up. For those of you that are watching right now, we're going to chop this up into little pieces, little bite-sized chunks on topic-specific chunks. We're going to throw it on our YouTube channel. We'll also put it in Club Wealth University. Mark is going to be speaking at Listing Agent Bootcamp in April in Nashville, Tennessee. You
Woo!
guys are crazy if you don't come out and see him there. You're going to you want to get to know him. And thank you, Andy. Andy says, thanks for all the amazing content. My pleasure and Mark's pleasure, I'm sure, as well. Andy, thank you for that. But guys, here's the bottom line. Get to Listing Agent Bootcamp. Make sure that you meet Mark there, talk to him. Mark, how do they contact you if they'd like more info? Oh, we just gave them the attorney link, right? Can we get that link again, Camille?
Yeah, and I think Kirby's on there with us too, but there's a couple places you can all go to. Um, if you go to markjkohler.com, markjkohler.com, you can get to the law firm from there. You can get to directed IRA from there. You get to Main Street Business from there. We have some business owner education you can get to from there. So markjkohler.com.
I
And
just
you can get,
posted that in the Facebook as
yep.
well.
And if you know that you're going straight to that law firm, just use the Club Wealth Law Firm link. It allows us to track what we're doing with Club Wealth, which is what we want. We want to continue to build that relationship, and it will offer you some discounts when you go to use the law firm service. So the law firm is there to help you in any state across the country, and it starts with an initial consult. There's no big
Mhm.
platinum 20 grand, whatever retainer. A couple grand will get
Yeah.
you a consultation with tax strategies and a trifecta. It will blow your mind. So thank you so much for having me, Michael.
No, I'm really glad you took the time, Mark. And guys, I use Mark and his firms for everything. I mean, literally. And I've dealt with so many, and honestly, I've dealt with some really good CPAs and some really good attorneys. I got to tell you, man, my default is always KKOS. That's Mark Kohler,
Oh, thank
and
you.
that's where I go. It's because they know they're the best. They're fast. They do a great job, and I know that I can trust what they say because I've trusted what they said and had people call me on it, and turns out, oh my gosh, they were right. And so, I'm really happy with that. Would that tax Would that tax strategy be through you, Mark? So it's not Mark personally doing that call with you. That's a good question.
Right. We have 10
What-
tax lawyers personally trained by me. They're fantastic. My highest and best use is training 10 quarterbacks rather than going out on the field myself. So they are just fantastic. And then we have our network of accountants that's 500 strong right now on the Tax Advisor Network. So that's where I think my highest and best use is. And I would be a terrible appointment because I'd kick it out, kill it on the first appointment. And then you go, when's our next appointment? 3 months from now. And you're like, what the hell? So you don't want me for the long-term hand holding. I would be terrible.
Well, and truth be told, Mark, yeah, I mean, you don't have the bandwidth to reply to everybody every Tuesday. It's just crazy how many people are trying to pull you in how many different directions. Andy, by the way, made a great comment in the thing. He said, "Thank you they did a great job in setting up my nonprofit." Andy's got a charity for nurses, so for those of you that are interested in that. But end of the day, they do everything, guys. Whatever, if you've got tax or legal needs, reach out to Mark and his guys, and if they don't know, if that's not what they do, they'll refer you to the right people. But start there, start at markjkohler.com, and just let them know you came from. We don't get paid to refer you to these guys. At the end of the day, I do want Mark to know it's not a waste of time for him to come and do stuff for us like this, and so it's helpful if you let him know that you came from us. So anyway, Mark, anything
Thanks
you
again,
want to add?
I've got a hard start here in a minute somewhere else, so I'll.
Sounds good, brother.
Thanks, Michael. See you.
Thank you. I'll see you in a couple of weeks.
Okay, thanks, Adam.
You bet. All right, bye.
Club Wealth is the only coaching company on the planet that will literally guarantee that you will double your income or make at least an extra $100,000 your first year coaching with us, or we will give you 100% of your investment back. Click the link below, sign up for the appropriate tier level, and let's get you a strategy session today. And I promise you, I 100% guarantee you, promise you that you will walk away with a heart full of gratitude for the time that we took for you, because you got so much value out of that call. Schedule your strategy session today. I promise you'll be glad you did.